brought me a client today that has $1 million to spend, I would direct them to a multifamily.
What does it cost?
I always say, it turns out to be free.
You put in the capital improvement, clean it up, increase the rents, go in and then refinance it and cash out and do it again.
Exactly. When I think of like a great opportunity, it would be a building that has a couple vacancies, poorly managed, the rents are lower, or we have the opportunity right away.
Guys, I'm here with Julian Colucci, Real Property Management Coral. Did I get that right?
You got that right.
All right, perfect.
Yes,
I don't want to give somebody else business.
No, absolutely
I'm going to give you business. So you are a property manager here in South Florida. You work with Vito and Anna all the time. I'm super excited about talking to you because, like I said before, I've got a ton of clients, high net worth, that are looking at Florida for opportunities in residential real estate investment. Okay, so the situation, since you are Canadian, the situation in Canada right now, or at least in the Southern Ontario belt, rental properties are not necessarily cash flow positive. In many cases, they are cash flow negative. Now, I do have a number of clients that are still able to find multifamily properties, let's say in the Hamilton area or a little bit west of Toronto, that are cash flow positive, but you really have to go looking for it. My understanding is that here in South Florida, there are quite a few good opportunities when it comes to rental properties being cash flow positive, being profitable with these things. But like anything, when you're moving jurisdiction from one jurisdiction way up north to down south, there are going to be a shit ton of nuances that we're going to have to cover. So why don't you introduce yourself? Let everybody know who you are, what you do, give a little bit of a background on yourself, and then we can get right into the meat and potatoes.
Yeah, so Julian Colucci, the owner of Real Property Management Coral, and I've been operating here in South Florida for just over 2 years. Basically came down here, all the things you mentioned, I kind of saw the writing on the wall in Canada in terms of investments. So kind of decided to take my talents down to not necessarily South Beach, but Fort Lauderdale, and open up a property management business. Things have been going really well. Through that, I see why South Florida is such a popular destination now for investment. There's a ton of factors driving that, right?
Right.
I mean, you have legislation is definitely in our favor, especially when you're speaking relatively compared to Toronto and Ontario. Legislation it's definitely in our favor. It's relatively easy to evict when needed. In Toronto, it's very difficult to get rid of those tenants that I've heard some horror stories of them staying well over a year without paying rent. I mean, that just doesn't happen in Florida. Post a 3-day notice when somebody doesn't pay their rent, and within that time period, you write up the writ of possession, and they're out within a week or two. You're able to kind of protect your investments in that regard. And obviously the economic factors. Florida is just a booming economy. It was number 1 international migration, number 2 domestic migration. Those numbers are only going to grow. So, you have the appreciation on the properties as well. A lot more upside in that regard, I think, relatively Canada. And just cash flow, I find there's more opportunities, especially in the multifamily space, where, you're able to get creative with financing and get a higher cap rate on your investment, get some more cash flow going. So there's just a lot of opportunities here, South Florida.
So a couple of the things we were talking about before you got here, we covered personal use properties, snowbirds coming down, which it's irrelevant to you. Then we started getting into these sort of hybrid properties where, platforms like Vrbo, Airbnb have allowed investors or individuals who may not normally have been able to afford a property in Florida, Canadian, but now it may be a possibility because they can supplement their costs, right?
Yeah, it's very popular. I get a ton of calls, people interested in, doing something like that. Again, though, it's still, it's a little bit of a higher entry point to get into something like that because, it's got to be conducive to, short-term rentals in a desirable location and, oftentimes a little bit higher value in the property. So, it's definitely possible, and, I get a ton of calls about it. So I've seen a lot of clients of mine have some success in that as well.
Well, but the one thing that I was interested in, and a lot of Canadians are interested in, from a purely economic perspective, I'm never going to use the property. I just want to make the most profit I can off my investment, right? So if you're looking at a budget of, just to throw a round number, somewhere in the middle of what most of the people are looking at, I would say is $1 million. Okay, so $1 million property. Where are you seeing the highest profit? And I'm not talking about profit from appreciation. That's something that like more, I guess you would know about in terms of the area to buy in, the growing areas where you're going to get appreciation. I'm talking about just cash.
Yeah, look, at the end of the day, it's location, right? When you think long-term, eventually at some point, you're going to want to sell this. So it's something to consider
For sure.
when you're making a purchase. And, we might argue on this about, hey, I can get you this multifamily in the middle of the worst area.
Yeah.
And it's cash flowing at a 15 cap rate. And
you got Section 8 tenants.
You're killing it.
Income.
And then you got to send Julian with the sheriff, once a month. And
Could be done.
And it's sad. Affordable living is very scarce when things are so expensive down here in South Florida. I was reading an article about repossession rates, how high they are, and how one bad circumstance, puts somebody out of a home, right? So I want to be sensitive to that. And, at the end of the day, Julian's doing his job. He's running his business. We're trying to cater to our investor clients. And, you have to be empathetic and compassionate when you're these scenarios.
Being pragmatic about it, right? Those of us in Canada who do want to make an investment here, we are looking to make a profit at the end of the day, right? And there's always going to be in any type of investment, whether it's real estate, stocks, bond, it doesn't matter. There's going to be
risk, right?
There's going to be a risk for sure, but there's also going to be a battle between current income and capital appreciation. When you're going for more capital appreciation, you have to sacrifice current income, right?
Definitely.
And vice versa. When you want a lot of current income, you're going to have to sacrifice capital appreciation. But from what you guys are seeing, let's swing straight into the highest cap rates.
Steal the mic again, but I think one really drives the other, right? So the rental incomes create the capital appreciation, because when we're selling these properties,
it's how they're
we're
valued.
selling them and valuing them based on the cap rate.
Right.
So the higher he can get in rents, the higher I can turn around and sell the property for, obviously.
You'll see a lot of properties kind of marketed as a 7 or an 8 cap, but I mean, by the time you get in there and all the capital expenditures and the improvements you need, it turns into a 4 or 5 cap. So you got to always be kind of wary of, looking at the tagline of the high cap rate, right? So you really got to do your due diligence on these properties and make sure you're getting into something, that will actually stay true to that cap rate. But to answer your question, I mean, $1 million range, I mean, there's plenty of opportunity. I mean, if you're looking for just, let's say you got $1 million you want to spend, right? A lot of clients of mine now, they're getting creative with the financing, where they're finding these owner financing deals at like something like 5% over 5 years, which is great. For example, one building that I manage, the mortgage payments or the interest payments are $7,500 a month, and the building grosses about $18,000 a month. There's high cash flow in that, right? Yeah. I mean, you're not paying any principal down in that. You're still getting the appreciation, but like your cash flow is very high.
Right. So explain that a little bit more.
There's a lot of work that needs to be done on some of these.
Yeah, you're kind of kicking the can down the road a little bit. These are buildings that, they're probably up for a 40-year recertification, that there's improvements needed, but, again, it's all relative, right?
I want you to explain that, because we were talking a bit off camera on this, and it's not a strategy that is common, at least amongst my clients, amongst just my clients. And I'm a dinky little tax and wealth management firm. There's probably hundreds, if not 1,000 doors, right? And I've never seen this particular strategy. So explain how it works. Like I come in, I put a very small down payment down, and the owner, it's kind of like a vendor take back.
Yeah, they buy the LLC essentially, right? Okay. And then I guess the existing owner, he'll still hold the note, I think, on the mortgage. They're just buying the LLC. Okay. And then they'll agree to like an interest rate, and it'll be interest only payments for the term they agree on, right?
So let's say typical would be 5 years.
5 years.
So interest only over 5 years.
With a balloon at the end or whatever.
Yeah, and then you have to close.
Pay it in full.
Yeah. And in 5 years, you'll have to assume a mortgage.
Then you go to the mortgage company, to the bank, whomever.
Yeah, you
refinance, pay them out, and then you got the place. Now,
these
places,
or flip it. Or flip it at that point.
So the idea is what? You put in the capital improvement, clean it up, increase the rents, go in and then refinance it and cash out and do it again.
Exactly. Rinse and repeat.
And that's what I was going to say. So one of the techniques that is sometimes utilized by my clients is they'll buy a multifamily property. make improvements, incremental improvements, but improvements nonetheless to each unit, which could, when you're dealing with small rent units, like in terms of lower rents, let's say $800, $1,000 per unit, an improvement that can increase rent by $200, $250 from a relative
25%.
standpoint is a 25% increase. Which then in turn, the way that my understanding from a financing perspective is that commercial bankers will look at the cash flow.
Yeah, exactly. And then, they'll lend based off of that.
And they'll lend based on the cash flow. So a 25% increase basically gets your entire down payment back, allowing you to repeat the process. Right?
5 years, you go back, take the guy out, cash out.
So this is sort of the strategy that you're seeing is
a lot of
successful
investors utilize this type of strategy for sure. Yeah.
And you are seeing positive numbers.
Oh yeah.
For sure.
Oh yeah. Definitely. It's hard to lose. It's hard
how many doors are you actually managing?
I'm at about 120
in 2 years.
Yeah, less than 2 years. About a year and 4 months.
That's pretty good.
Yeah.
That's pretty
I'm
good.
proud of it.
So you're hustling.
I'm hustling. Yeah.
This guy's crushing. I met this guy, he had one door.
Yeah. We're one of the largest firms. It's a franchise that I own, and we're one of the largest firms in South Florida just after a year and 4 months.
And these are mostly long-term rentals, right?
I'd say 95%.
Okay. And so it's really for the investor that truly wants to be passive.
Yeah. I mean, I have, a variety of different clients. Most of them are absentee owners, and, they're out of state, and, they absolutely need a property manager. Some of them, although they're absentee, they're a little bit more involved. So, there's different nuances with every client, but, our wheelhouse and, what we strive for is, finding that intentional investor who is looking to buy multifamily properties, 10 units and above.
Okay. So let's go back to the example that I wanted to sort of portray. So imagine I come Canadian investor and I'm like, okay, guys, I engaged the two of you. One is a property manager, one is a realtor. And I'm like, I got $1 million. That's my budget. Ignore where I got the money from. Okay. I robbed the bank or whatever the hell. Ignore where I got the money from. Like obviously financing is a completely different beast, and we'll have a specialist on financing later. But if my budget is $1 million, hard stop at $1 million, and I am looking for an investment property only, I want to have a very, very good cash flow because I don't want to be funding this thing on a monthly basis. The odd time that I would have to fund it, okay, I'm happy to fund it if the roof breaks down or this or that happens. What is the strategy that you guys would be exploring for that type of a client? We'll start with are we looking at a multifamily?
Yeah.
Right?
Yeah. And I mean, if the goal is cash flow, then I would say multifamily.
Well, cash flow with a reasonable expectation of very long-term appreciation.
Yeah. I mean, I think anything you touch, you get that. You get that upside. If you want to be cash flow and kind of immediately, then I would say multifamily.
Okay. And by multifamily, let's define that. All right. Earlier on, you said that is 2 units or up.
It's not necessarily one thing or another, like a duplex or triplex. It depends on each kind of case by case.
From a real estate perspective, right?
Yeah.
4 units or less is considered residential.
Okay.
Anything above 4 units is commercial. So obviously if you're financing traditionally or conventionally, that's going to be where you kind of split off between residential and commercial.
So let's say 5 units and up would be really what we're talking about in terms of
I think 5 units and up in terms of really making money. If it's your first time, you're going to get a duplex, triplex, 4plex, you're testing the water. But if you're working with a group and you have substantial capital, you're looking at multi-units.
So let's say 5 units and up. Is a $1 million budget realistic or unrealistic?
Yeah, we kind of assess it kind of case by case, cost per door, and then we'll run the numbers, figure a cap rate, do our due diligence, and see what capital expenditures are needed. It's really case by case. There's not a set formula hey, you buy a 4plex, you're going to make money. It's really case by case, getting a good deal and doing proper due diligence. Right. And, I'd say most things that you touch here in Florida, you're making money. It's hard to lose money here, honestly.
Okay. Look, you're generally, I like to say between 200 and 300 a door, right?
Yeah. Depending on the condition.
In the area, right?
Look, in the area, you might get something for 150, completely dilapidated in a bad area, and you got to put that money back into it anyways, right?
Yeah.
Generally in a decent area, I got a duplex couple minutes up the street from here in Fort Lauderdale, Poinsettia Heights, Wilton Manors, kind of in that little section there, Middle River. And it's a nice, they're 222s, good location. They're building in the area, and we're listing it for $550,000.
Right.
Yeah.
Needs a little bit of work, but it's a good sized lot. Maybe put some towns on it in the future. So that's the other part, is like, what's the long-term play and appreciation, not only on the property value, but the land value, the area, and what can we develop there, right? And if you can kill like two birds with one stone, then you're crushing it.
Yeah. And kind of back to that, it's like you find these properties, right? And it's not, you look at cost per door, right? There's value in the capital expenditures you put in, right? Like if you find something a little bit more dilapidated, you put 30, 40 grand into the build. Like people always want a turnkey product. Right. You know, they don't want to deal with the hustle and bustle and all the hassle of permitting and construction.
That's how you make the money, though.
But absolutely. In, right? I mean, you got to have a good property manager, good team behind you, right? And
100%.
Kind of value you come in.
So
right?
I guess what you're getting at is, you get a turnkey product, you're going to get a turnkey return on investment.
Yeah, it's going to be a lower cap.
That's what I need. I can go out. Anybody can go out there and buy an S&P 500 index fund, and you know what? You'll probably do all right over the next 20, 30 years. You'll do all right. You're probably going to outpace inflation, and you're going to get some sort of a reward for the risk involved with that. But you're not doing anything.
Yeah.
Okay. In this particular sense, okay. So if I get a pure turnkey property, you know, the high quality, doesn't need any work, good quality tenants already in it, and I hire you or someone similar to you to manage it, so that I'm literally hands off. Okay. I'm still looking at a decent cap rate, or no? Yeah.
You're probably closer to a 5 cap at that point if it's completely turnkey.
Which is still pretty good.
Yeah, which is good, you know.
Still pretty good. Like, because even if I am taking a mortgage, it should almost cover the mortgage as well. Yeah. Right?
You'll be covering your debt service.
That's the part where you got to be a little bit careful, because like you said, you got to dig into the numbers. They'll advertise an 8 or a 9 cap. Then
but 5 cap would be more realistic for a situation like that.
If it's turnkey and it's like a newer building and there's you don't have to replace the roof in 3 years, you know, it's you're looking more to a 5
but
cap.
It's not only that, right? It's the taxes, and from a loan perspective, it's the insurance, right? So they'll advertise a 8, 9 cap, and then you look under the covers and you're only paying $5,000 a year for insurance. It should be $30,000 a year for insurance, because they're not putting in hurricane coverage.
Okay, I got it.
Right,
I got it.
And they're essentially self-insuring because they own it outright. You're coming in with a mortgage now.
No, they're going to.
You're not going to get the same return.
Yeah.
And then I love what you said about them buying the LLC. Right?
Yeah.
So with that, you're also not getting reassessed in taxes.
Yeah,
right?
It's a great play.
So
because the LLC doesn't die, the LLC is considered an individual under the law or whatever.
So they might have bought that. The owner might have bought these things for $50,000 a door 15 years ago.
Right.
50, I say 15,
taxes
50,
are nothing.
50. And they're going to go up because you're not homesteaded, you're not protected.
Right.
But with where appreciation has gone in the last 15, 20 years, like once the county sees the new purchase price, and bam, 1.8 to 2%, and now you're starting all over again.
Okay.
Right?
Okay. So there's a couple of factors at play, but I guess the idea is, like anything, if you buy a turnkey product, you're going to get a turnkey return on investment, but it still sounds like the cash flows and the cap rates are pretty good, right?
Yeah. Honestly, if you brought me a client today that has $1 million to spend, I would direct them to a multifamily, something dilapidated, and we can create the value. We'll get in there with our team, and we know what to be done. We know what it needs to be done to get this property.
So you can. The next question is, okay, what's the actual strategy here? Then let's get somebody who's willing to put, roll up their sleeves, put a little bit of elbow grease into this, deal with a little bit of headaches. Okay, still have $1 million. I want a multi-unit. I want it to be cash flow positive. I want to. Eventually I'll pay it off or whatever. It'll go up in value regardless. What's the game plan? Because I want to do something a little bit better than turnkey when I'm putting in a bit of an effort and taking a little bit more risk. What's the game plan for you guys?
Yeah. Well, I mean, you start with him. So.
Yeah. So generally, just like we do with our hybrid buyers and our in principle residents buyers that we talked about in our last session, right? Is we start with a buyer consultation, right? And this is where Julian and I work really well together, and why I brought him in, right? it creates trust, because me as the realtor, I don't want to guarantee you an investment or tell you these are what the rents are going to be. And now you have two guys kind of working for you. So we see Julian as our property management arm to our real estate business. Right?
Got it.
We will identify a set of properties based on the buyer's budget, kind of take them through it. And then same thing, like come down, take a tour with us. Let's get in the car.
Yeah.
Let's go look at stuff.
They're in the area.
And really see, do you have the appetite to do it? Right. And are you committed to this transaction? Right. Because, Julian's got 120 properties to manage, and
we got a client list to manage.
We got a client list to manage, and we want to work with clients who are committed to working with us.
Got it.
And in that commercial area, you find that a lot of investor buyers tend to kind of want to self-manage, right? I don't know if you see that as much as I do, where, hey, I could do this on my own.
It's more like single family homes. It's
or even they're jumping
multi-unit. I feel that like apartments and multi-unit. At least my clients that have apartments and multi-unit, a lot of them will have a manager.
Right. Well, I guess even from looking for the deals, from commercial buyers tend to work with multiple agents. So you'll see they have like 10 agents kind of running around for them,
right,
looking for the same stuff.
Okay.
And the really good, dirt cheap stuff that needs to work is generally off market, and you got to work a little bit more for it, right? So we'll implement buyer broker agreements, because ultimately, we don't get compensated until a deal closes.
Obviously.
So it's great to see the new legislation that is kind of mandating it from residential. Commercial, it's always kind of been the wild, wild west in terms of like negotiating terms.
But that's business
and fees. And
that's a business to business. Whereas like residential, they're trying to protect the individual families.
Yeah, you're dealing with investors. You're dealing with more sophisticated buyers versus like, a family who's looking for a home because they have twins on the way.
So when we buy this property though, like I said, we want to put in some elbow grease. We want to I want a better return on investment. Right. Obviously, there's a risk to any investment, but what are we doing? Are we going unit by unit, or are we just kicking everybody out and redoing this whole thing?
I mean, again, it's kind of case by case. Every property is unique. Kind of where I see the big advantage and kind of the biggest opportunity is in those properties that have been neglected, poorly managed. The rents are not where they should be. They're lower than market value. I mean, and then the strategy will depend on, when are these leases up? When are people moving out? How many vacancies do we have? Can we start right away and get in and start renovating units right away and lifting the rents? It's kind of case by case. But yeah, when I think of like a great opportunity, it would be a building that has a couple vacancies, poorly managed, the rents are lower, where we have the opportunity right away. We can get in there and make the property more appealing. We could renovate a few units, start with those, getting those leased out. And then as tenants leave, we won't renew them because we want to improve the property and renovate the units. So again, the higher return, the greater risk. But
look, it depends, right? You don't want to go and create vacancies when you don't have to. I think it's really about, we create a roadmap for the client based on the information available, right? So once we have all the leases,
you can kind of creative too, right? I mean, a lot of these
move
leases
them around, you start shifting them. Hey, listen, I'm going to move you to the nice unit. Right?
Exactly. Yeah. There's always ways to get creative.
So there are ways. You don't have to just walk in like an asshole and
get
kick everybody out.
No, you want to, because you want to still get a little bit of cash flow, right? You don't want to have a building completely empty. That's a pretty big undertaking.
Listen, if you have the capital to sit there and do it all at once, and you want to maximize and accelerate the profitability of it, that can be done too.
Right.
You obviously can't just go kicking tenants out. There's laws, there's leases, there's...
I'll give you guys an example. A client, again, owner financed this building. He bought the LLC. There's 11 units. He only had 4 occupied units. And
so it was very vacant.
It was vacant. The guy couldn't keep up with renovating the units. He was trying to improve them. They were all like half done. Okay. So we got in there. We finished all the units. We raised the rents in all these units, and then that gave us kind of the power to raise the rents on the existing tenants on month-to-month leases.
Okay,
they were undervalued. They were like paying $1,100 when market value was $15.
Right.
So then once we filled the vacancies, we finished all the renovations, filled the vacancies, filled them with market rents, good tenants, and then we kind of
jacked up rent.
These
on everybody
guys
else. Took off. Yeah.
It is. They stayed. They paid. Because they know. I mean, that's market rent, right? There's nowhere else to go.
So you can. The laws permit you to bring rent up to market. There is no. Is there any control? Obviously, if you're on a
There's
if
no
you're on
control.
a lease, if you're on a lease, you're on a
Yeah,
lease.
you're
You can't
locked
just
in
check.
for the
Yeah.
year. Exactly. Other than that, there is no control. It's free market over here. There's
Okay.
no rent stabilization whatsoever.
So there's no rent control per se.
None whatsoever. That's the beauty of Florida.
So interesting. I was reading an article just yesterday morning, and federally they want to implement a restriction.
Yeah, they
and
could get lost.
They're talking. Yeah, they're talking
America,
about
baby.
They're talking about a 5% cap annually.
Yeah, typical. I mean,
So-
government always wants to stick their hands in our
in
pocket.
this-
We won't get political.
in
though.
this situation here. I'm
But is
sure.
that going to be enough to keep up with the cost of inflation, property taxes, insurance increases?
It's not. It'll never happen. It'll never happen.
Are we turning into Canada?
No, it's not going to happen. I mean, that's why.
So we're not in Canada.
The U.S. Constitution, greatest political document ever drafted.
So seriously though, like, you know, I'm sure you've dealt with like some questionable properties.
Have I ever?
What's the most fucked up tenant you've ever had to kick
man.
out?
Is it story time? I mean,
Yeah, just give me a story here.
Okay, story time. It's like maybe 6 months ago. I signed a contract with an owner, manage a duplex in Oakland Park. Signed the contract. Super nice guy, absentee owner.
Okay.
And he tells me, hey, we have a bit of a squatter issue at the property. Sorry, I didn't let you know. Okay, no problem. Should be a good experience. He's like, don't worry, eviction process is already underway. Get your locksmith, go to the property, change the locks. Sheriffs will evict them. No problem. Show up with my locksmith. The deputies were with me to complete the eviction. And, we noticed there's somebody kind of rumbling around one of the properties. We're like, okay. Officers kind of tell, hey, take a step back. So we're there. My locksmith, he's all spooked now.
Right.
Long story short, within about 10, 15 minutes, every corner of the block was blocked off. SWAT team.
Holy shit.
Guys coming in, AR-15s, like
Guy
complete
wouldn't
shutdown.
leave?
He wouldn't leave. The guy wouldn't leave. He was kind of barricaded himself in the property, wouldn't leave, wasn't cooperating. Again, long story short, they eventually got him out, took him into custody. For whatever reason, he was released like within a day or two. So I go back to the property at this point, and I see the notice is all ripped off the door. The
Guess
lock's
who's there?
busted into. I'm like, this guy's back.
Yeah.
So I call the cops again, same situation, blocked off all ends of the street. I'm talking like 25 cruisers at this point, like all Broward Sheriff's Office was
God.
there. And, but he wasn't there. Everybody left. I'm there at the property by myself. I'm like, I'm getting the hell out of here.
Yeah.
So we ended up hiring private security, kind of staked out the property. I'm there waiting. And I'm like, I'm going to bed at night. I'm like, for some reason, something's telling me I'm going to get a weird call tomorrow morning. And lo and behold, next morning, get a call from security and the sheriff saying, somebody was shot on your property.
No.
Yeah. So the guy came back. The security guard was well within his rights. He was protecting the property.
Yeah.
Fired 2 warning shots. The guy kept advancing towards him.
So he popped
Shot
him.
him. He didn't kill him.
Okay.
Shot him in the leg. And neutralized him. Took him into custody. And
Welcome to Florida.
yeah, the court case is actually going on right now. I'm on a standby subpoena in case I gotta give my statement. But little lesson there. It's like you can always get somebody out of there. This isn't Canada. You know, if you need somebody out of the property one way or another, they're getting out of there. Dead or alive. Dead or alive. You're getting your property back.
I remember getting this call. He was late for a meeting or something.
Yeah.
He's
I'm
like,
I'm a little tied up.
I'm a little tied up. Parking's barricaded over here.
Yeah. I mean, that's one story. I mean, and it's not a tenant I placed or anything. So
Right.
I knew right away. I go, that's the story.
it's something I inherited. But we dealt with it. I mean, the property's now fully leased, both sides, making great rental income. And
So I guess the bottom line, really, in my opinion, I would hire a property manager to handle it. But what does it cost? Like, what does it cost people to hire someone?
Yeah, I love this question. I mean, I always say, it turns out to be free. It covers the cost, because if you hire a professional, he's going to save you money. In the long run, especially even in the short term, right? Mm-hmm. He knows what to value your property. He knows how to lease it out. He knows how to syndicate the listing, market it. You're saving time. Every month that it stays vacant, that's 8.3% of your annual income, right? And that's typically what we charge. Okay. Gross rent. About
so it's 7 to 10%. It's sub 10% then.
Yeah, sub 10%.
For a long-term rental, but not for a short-term rental.
Short-term is closer to 20.
Okay.
Yeah, some firms charge 25.
Okay.
We're 30. I even heard 30.
I've seen 30. Yeah.
Oh, yeah?
It's crazy.
Yeah. Okay.
But I get it. It's a lot of work. I mean, having done a few short-term rentals now.
Yeah, it's a lot of work.
It's a ton of work. And,
So basically sub 10%, are you finding the tenants for the clients as well?
Yep.
And you're vetting them. You have a whole process. Like what sort of due diligence are you doing on the tenants?
We have like a whole process, whole software that screens the tenants for us. We're able to see basically everything, like the residential tenant landlord disputes, credit scores, collections. We see everything, right?
Okay. And what are the big red flags?
Credit score is a big one, right? I mean, obviously, if they have previous evictions, that's a big one.
Yeah.
You don't often see that, but, it does come up. And, for either a good reason or a bad reason, it happens. It's case by case, and we kind of vet them. But again, we're always in control of the situation. If there's, especially when you're kind of dealing with multifamily and lower income, Section 8 is actually great. That's government subsidy. That's the best.
Yeah, explain that, because you were mentioning this before. I have no idea.
Yeah,
what
kind of going to digress
means.
into this, but Section 8, it's basically government subsidy for rental. It's like a rental voucher or that the government subsidizes.
So like a form of a welfare specifically for rent?
Okay. Yeah, and the check hits every month. It's guaranteed, right?
So you are paid, the investor is paid by the government directly?
It'll be Hollywood or Miami Housing Authority, Fort Lauderdale Housing Authority.
Okay. So it's organized by municipality then?
Yeah. And the check, it hits every month. So, those are great. You're guaranteed, right? You're not spending time chasing tenants.
It's pretty much a risk-free
Yeah, those are
rent.
great. So even on the lower income, it's you don't have to worry, like these tenants, can they afford it? This, that's like Section 8 vouchers are the best.
Well, and they don't want to default on it, right?
Yeah,
so sometimes they gotta pay the difference.
Yeah.
The voucher doesn't cover the whole rent because if they default, they lose their voucher.
Okay, so Section 8 vouchers or however they are termed won't necessarily cover the full rent, but they will subsidize the person's rental costs.
In the Section 8 tenants that I have, in most cases, they cover like 90% of it.
Okay. So you're not sitting there chasing large amounts of money.
Yeah, exactly. Section 8.
Right? And if they aren't paying their share 10, 20%, whatever it is, it's the eviction process is relatively smooth.
Yeah, it always is. Aside from the guy getting shot, but even that, the guy, he was out within a month still. It's still pretty good. But yeah, the eviction process, it's a whole other story. But again, it's pretty smooth. They're able to get rid of people. But before I digress, even when you're dealing with lower income, oftentimes we take a larger security deposit, at least give us a little extra cushion. And if they default on rent, then we have some recourse at least. We have We have 2 months of security deposit, right? Where we can, they'll be gone long before the 2 months expires, and we're still have enough balance.
What are like the biggest problems aside from tenants? But it could be tenants. What are the biggest problems that a new investor into these types of properties, these multifamily properties, what are they going to run into? Like what are the biggest red flags, the biggest things that you think a new investor should be looking out for?
Just hiring the right people, honestly, right? Because you're not hands-on, you're not here, your eyes aren't on it. It starts with hiring a good property manager, and everything will flow kind of seamlessly after that. Doing my market research once I decided to open up a property management business here, I would call other property management firms, and it's crazy. Like I wouldn't get a call back. I was just kind of posing as a potential client, hey, and it's crazy. Like communication's so key, and it's something that lacks here with a lot of property managers. So it's just, finding the right team to work for you, and everything else should be relatively.
Yeah, because one of the biggest complaints I always get about property managers is that they just take on anything. They take any business, any door, and then they just pile it on, collect, and they're basically just putting out fires every day.
I take over for those guys. Like I've already been now in my first year of business, I've taken over for, almost all of them. It's existing properties who had property managers, and, they fired them and hired us. And I kind of like got a little glimpse into their operations and, how they lease properties. It's like, come on, like,
right.
like it's not that good, but I get it. You accrue so many doors and kind of get lost. You lose the personal touch, right?
Right.
You lose the extra set of eyes on it, right? And that's what happens. Right. They get neglected, and that's why you have 20% vacancies in a single property, right?
Right. Or that's also the owner. If the owner's not answering phone calls,
and it's more common than you think down here.
Right.
That's why you hire us.
Yeah. Super wealthy families will come down, just put money in, and then forget about their investment. Maybe. Yeah. And then in terms of risk to the investor, other than, obviously the risk of vacancies or risks to the physical property. Like, what are the biggest risks that you're seeing novice investors are walking into?
It's hard to say. I mean, in terms of like risk for rent, I mean, because there's no rent stabilization, it's not like the market's going to dip and, you paid a certain amount for a property and then the rents dip, and
right.
and then you're cash negative here. It's more so with like the personnel that I see the risk, like not hiring, not vetting the right people, and trying to do too many things themselves, trying to self-manage. And, that's why it's so imperative to hire the professionals to do the job right and have the right team. A lot of time they think they're spending more money, by hiring somebody to do it.
Right.
We save people money. The relationships that we have with trades and vendors, that's another huge thing here. It's hard to find reliable work down here, hard to find reliable trades and contractors. Honestly, like maybe 4 or 5 in every 10 people that I talk to that have tried to, do a renovation that don't have the experience, and they hired a contractor. The contractor takes off with their money. I've heard the story, like it's an age-old story. It's
wild.
It's crazy. And again, that's why you got to hire somebody that you're at least somewhat familiar with, and
you guys will run that project. You guys,
that's kind of like our value add is. My background is in construction,
right? And
we handle a lot of these renovations internally. So we're not going and hiring another GC and adding another 20% on
So
top
you
of
guys will GC?
Yeah, we'll basically act as the GCs,
okay.
right?
But I mean, you have to be compensated for that. Like that's not just part of your
exactly
your rent, the rent roll.
Exactly. Like anything, that's another thing. Like people, they don't understand. Like in my contracts, I have up to 20% markup on maintenance.
Right.
And, people are like, what's that for? Well, we don't have control. We don't know how many work orders are coming in every month. It's hard to set a fixed number to that. So that's why we do it based off a percentage.
Okay.
And that 15 to 20% basically compensates for the time and effort.
The additional time and effort.
Yeah, that, we're scheduling work orders, we're following up, we're making sure that the work's done right, vendors are paid,
So that at the onset, if I were to buy a property and say, hey, listen, there's some vacancies, it's run down, it hasn't been maintained well, hasn't been looked after well, absentee owner, looks like a good opportunity, but we're going to have to go unit by unit. Let's say it's a 10-plex, I don't know, whatever. Yeah. And we're going to have to go unit by unit, and the first 5 units are going to be X, Y, Z in terms of cost. You layer on your markup, and that is your fee to
exactly. And kind of like the value that I'm adding is we're not going and hiring another contractor 20%. We have full-time employees that are doing the work. Okay. So it's like you're paying the one fee to us, and you're kind of totally excluding a contractor.
And you'll find the floor guy, you'll find the plumber.
Yeah, we have all these guys, just with our relationships, right? If it's not my internal staff, then it's our our preferred vendors that we use and we have great relationships with.
So it looks like then there are some definite pure investment opportunities in terms of multifamily or multi-unit dwellings that's defined as 5 units or more within a reasonable price range that we can do a little bit of work to jack up the rents, increase the cap rates, and maybe if the moons align properly and we get commercial financing on these deals, if that is possible, then we can start, go on to the next one, go on to the next one, go on to the next one.
Yeah.
So it seems like it's a repeatable process. It's not like a one-off.
Yeah. And it's kind of like designed to be a repeatable process and keep the economy going.
And it seems like there's a market for these things here. So
yeah, I mean, when you look around Florida, I mean, there's not a whole lot of land to redevelop or develop on, but there's so many opportunities. Buildings were built in the 50s and in the 70s, and I managed 2 buildings that are built in the 20s. I mean, there's so many of these old properties that they could certainly use the fix and flip, right? There's a ton of opportunity here. It's just identifying the right one and ultimately putting the right team, hiring the right professionals to do it. But yeah, there's definitely value.
More of like a fix and hold, right?
Yeah, you fix and hold. I mean, you kind of set your objectives, right? What you want to accomplish and what the time frame is, and then we can kind of look at the property, case by case. And
well, I mean, for me, I got the information I needed out of that, man. That was fucking great.
Good.
Right?
No,
thanks a lot.
Yeah, that was awesome.
Yeah.
Julian, thanks for coming on with us.
Yeah, thanks for having me.
Do you have anything else you want to add?
Oh man, I just definitely I can't stress enough, hire the right professionals, and that's obviously us. So
okay. And how do people get in touch with you?
I mean, we got socials, we can tag them in the thing and reach me directly.
Awesome.
Yep.